Welcome back, everyone. Thanks for joining. Today on the Joseph Carlson Show, Donald Trump once again wins the presidency, and we're going to talk about it. Now that we know who the winner is, we can actually look at the policies that might determine some impact on the stock market over the upcoming 4 years. Each of these candidates had some similarities, but they also have some striking differences. The market is already celebrating a Donald Trump win, and I think overall celebrating having the elections, having this ordeal finally behind us and looking forward now. The Dow Jones is up 3.2%, the S&P 500 is up 2.1%, and the Nasdaq is up 2.4%. Even the Russell 2K is up 4.83%. This is across the board a massive day in the market. My portfolios, likewise, are at all-time highs. They've reached a point that they've never reached before, and each one of them has. With the passive income portfolio gaining $290,000 in gains, just today it's up $15,000, around 3% in the green. If we look at the story fund here, this is now up to $90,000 in the green. Many of the companies in my portfolio are like a rocket today. They're just taking off. But the impact is different from company to company, and there are some that are doing a little bit better than others. For example, if we look at one company, this one's not in my portfolio, Tesla is having a very good day. Obviously, this is following Donald Trump's win. Elon Musk has aligned himself with Donald Trump. He kind of hitched himself to that wagon. That turned out to be a good move for Elon Musk. Tesla is now up 14% on the day. We have other stocks like Texas Roadhouse, up huge today, 6% on the day, crossing $200 per share. Why is Texas Roadhouse above 6% on the day? We're going to be discussing. We have other companies like Salesforce up 3%. Visa and MasterCard both are up 3 and 4%. Huge days for these companies. We'll be discussing why they're going up so much. Google, a company that's been struggling with any bullish sentiment, is now up 3% on the day. And this impact is from the elections. There are specific things that may be happening to Google. We also look at companies like Intuit, up 6% on the day. We have Amazon, up 3%. We have S&P Global as an outlier. Both S&P Global and Moody's are both in the red today by a decent margin. Why are these companies trading down while so many companies are trading up? We're going to be discussing the reasons why. And then we have other companies continuing their trend upwards, like Booking Holdings. Many stocks are being impacted more than others in various ways, and that has to do with the policy that investors are reading into these stocks, the policies that investors believe will happen over the next 4 years. So we're going to be going over all of it. We'll be looking at the impacts this will have on companies like Tesla and other big tech companies, from Dan Ives and Gene Munster. We'll be looking at what David Rubenstein says about a Trump presidency in terms of regulation and how it will impact these type of investments. So we have a lot to get into in this episode. Let's go ahead and jump in. Now we start off today with the headline news. Of course, Donald Trump won presidency again. And going into this election, I had a thought in my mind that it was going to be a close one, a nail biter, a really bitter election where when we were voting and counting the votes, it was going to come in real close for each state. It was going to drag on for the next day, maybe even a couple days, and be one of those situations that's really tense and really close. And that's not really what we got. This was a convincing win by Donald Trump. When we look at the election results reported from the Wall Street Journal, the takeaway here is that this wasn't quite as close as some of us thought it would be. For example, we look at the Electoral College. Donald Trump officially passed the 270 mark to officially become president. The Electoral College is what counts. That's what determines who wins presidency. But even though he crossed the line at 277, there's still a number of swing states still tallying votes that the official vote count will be counted eventually, and all of those are leaning towards Trump. So it's likely that he's going to win by a larger margin than he has right now. Now, in the case of Republicans winning, in many cases they lose the popular vote. In this case, it looks like Trump is actually going to win the popular vote. He has a 4 million vote lead on the popular vote. Republicans also took control of the Senate, and it looks like there's a good chance they'll take control of the House as well. So this wasn't as close as I thought it was going to be. It was overall a decisive victory for Donald Trump and the Republicans. Now, in these cases, I always understand that there's people that don't agree with this. Of course, nearly half the country doesn't. It's never fun to be on the side when you're losing. Every one of us has been there. If you've been an adult long enough, you're going to feel what it feels like to lose, and that's never fun. And in this case, it's going to give time for the Democrat Party to figure out what went wrong, to recoup, to re-strategize, and come to 2028 with a much stronger ticket. But until then, this was a decisive victory. So now that we finally know who's going to become president, we can all get the elections behind us and move on with life And that's a relief for many investors. Uncertainty is never something that people look forward to. So knowing who's going to be president and having that uncertainty behind us is one positive thing for the markets. But in this case, with a Trump victory, the capital markets are clearly reacting with a lot of extra positivity. And that is because of many of the policies Trump has signaled with lower taxes and lowered regulations. David Rubenstein outlines Trump's legislative agenda and how it will impact the markets.
Clearly, the stock market today will be up very strongly. I think many people in the financial markets were pushing for and wanted a Trump victory, and they got that. But also what you got out of the election appears to be a very strong, united government in the sense that the president is likely to have the House and the Senate, not just a majority, but many people in the House and Senate will feel they got elected because of him. And not since 1964, when Lyndon Johnson won overwhelmingly and he had big majorities in the House and the Senate, many of which those seats came about because of Johnson's strong coattails, did you have a president with this kind of power. So Donald Trump has the power as president to get a lot done through Congress, and I think members of Congress will go along a lot with what he wants. Even when President Obama had majority of the House and the Senate initially, he didn't have quite the coattail effects that I think Donald Trump has had in this election. So I think you're going to see a united government. I think the country seems to want a united government. I think you're also likely to see the markets go up for a while. For sure.
He believes that not only is the stock market going up big time today, but he believes that's going to carry forward into the future. Because this wasn't just a Trump victory by narrow margins with the divided House and Senate. This was a mandate. Trump won a big landslide here, and it looks like he's going to win a united House and Senate, meaning that many of the things he's wanting to get done, his principal policies of lowering taxes and deregulation, have a better chance of getting passed. Now, if we get those things that investors look for, deregulation, lower taxes, sped up GDP growth, that of course would be a positive for the market. So investors are already pricing in some of this happening because the path of actually implementing it seems more clear. Now, in terms of policies that are likely to be implemented, one of them is, of course, tariffs. Donald Trump has repeatedly talked about tariffing China, and that is something that does not require approval from Congress. So as soon as he takes over presidency, he can slap tariffs on China or raise the tariffs or do what he wants in regard to that. The other thing that does require approval from Congress is taxes. The Trump tax cuts that have been in effect for the past 4 years are set to expire relatively soon.
I think his main legislative initiative, though I obviously can't speak for him, would probably be things in the tax area. His tax cuts from 5 years ago are expiring, and so if he wants to have them extended or enhanced, he'll have to get that done relatively quickly. I suspect if he controls the House Ways and Means Committee and the Senate Finance Committee, it looks like he will, he shouldn't have as much difficulty getting that done.
Many of the policies that Donald Trump will be working on have already been in play for the past 4 years. We've already had some level of tariffs on China, and we've already had the Donald Trump tax cuts. The difference is, instead of changing them or taking them away, he's likely going to work to extend them. Now, if we look forward to at least the next 2 years of passing lower taxes and less regulation, obviously the market's going to look at that positively. But the response here is incredible. It's crazy. My portfolios are going up just like a rocket ship. Today, this one is up $15,000. It's really incredible to see. This is an all-time high for the passive income portfolio. We have gains of $290,000, which is just incredible to see, and a total portfolio value of $780,000. If we switch over to the story fund, we see the same thing here. We're reaching all new all-time gains, up to $90,000 total in gains, with a total portfolio value of $254,000. So it's incredible to see the gains here, but even so, there are some companies that are winning more than other companies. There are some winners and losers here. The first one that we can look at is actually one that's not in my portfolio, but it's a company having a particularly good day, which is Tesla. Tesla's up almost 15% on the day. And obviously, this is a response to Elon Musk aligning himself with Donald Trump. I believe a lot of this comes down to regulation. If we look at Elon Musk's businesses, of course, a lot of them require a ton of government regulation, government approvals, working in line with government. For example, he owns Tesla, SpaceX, Neuralink, and X. All of these companies that Elon Musk owns are intertwined with the government in terms of regulation. You can see all these regulatory bodies here that are already investigating and looking into these companies. They have oversight over them and some level of influence. So if you're friendly with the president and someone that has influence over all these regulatory bodies, that's going to be a good thing for your companies. Gene Munster explains why part of this move is driven by the emotion of this change.
I believe Tesla is up today because of emotion. And I think the emotion of Tesla investors, their leader, of course, is Elon. He just had a big bet that paid off. And then we quickly look to what's the next big bet and the probabilities. And the next big bet for Tesla is around autonomy. And he's been very clear that this is the future of the company. And forget about what's going to happen with EVs and tax credit. What matters when it comes to Trump and Elon Musk is Trump's ability to make it easier for Musk to advance what they're doing around autonomy, around their tech stack, to use less LiDAR, for example. That is going to be the regulatory piece around FSD autonomy is going to be more challenging than the technology piece. And that took a big step forward today.
With Tesla being a company so reliant on regulatory hurdles, having yourself aligned with the person in charge is certainly a benefit to the Tesla investor. So there's a reason for Tesla investors to be a bit more optimistic about the future. Another person that has been consistently bullish on Tesla is Dan Ives, and he reiterates the same thing, the same sentiment that this is going to be a positive impact on the future of Tesla, mostly because of the regulatory hurdles.
So I think there's three things. One is that the EV tax credits get taken away. And I think that even though negative for EV sector, bullish for Tesla because of their scale and scope. So from a price
bad for Detroit, though, potentially.
Bad for Detroit, bad for GM, bad for
Which
Ford.
You cover as well.
Which and my view going into this was like that was a potential risk.
Now he says that the EV credits being taken away is a good thing for Tesla. And the logic here is that even though it will directly impact Tesla negatively, it'll hurt Tesla's competitors even more. So in the case the EV credits get taken away, it actually increases the moat of Tesla. It distances Tesla further from their nearest competitors. Now, outside of Tesla, there's a number of companies that are also having big surge upwards today, Google being one of them. Google's a company that I own, and I've owned it for some time. It's a company that I've been bullish on for actually quite some time. I've owned it in the Story Fund. It's been one of my core holdings. I'm currently around $16,000 in the green, a position size currently of $44,000. This is where I've owned it for the longest, but I started buying into Google just recently in the passive income portfolio as well. I traded out of Canadian Pacific, bought more into Google, and I'm bullish on this company. I'm buying it right now. In fact, I'm actually buying more Google today. I currently bought $33,000 more. This new position is up around $1,100. I've gone over the various reasons why I'm bullish on Google because of the low valuation, the low expectations, the resilience of their search business, the growth of YouTube, and especially the growth of their cloud business and revenue and margin. Overall, I really like the story and the valuation of Google, which is difficult to find in a market like this. But Google has been struggling to gain traction. A lot of investors are concerned about this company. And today we see it up 3.5%. Now, the reason that Google is likely to move up in a Trump presidency is specifically because of deregulation. Right now, big tech is under attack by every regulatory body. Right now, the FTC director is Lina Khan, who is outwardly antagonistic against companies like Google and Amazon. In fact, she wrote her entire thesis in college on breaking up and breaking down Amazon. Now, we don't know for sure if Donald Trump will replace Lina Khan with a new FTC director. So far, JD Vance has mentioned that he actually views her positively in some aspects, that he likes some of the things she's doing. So there's some positive sentiment there as well. But I think there's a good chance that this is a role that will likely be changed. Don't know for sure, but there is some speculation on that. If Lina Khan is taken out of this role and there's someone that's a bit more friendly towards larger companies like Alphabet, like Amazon, if they're not constantly under threat of being broken up, being fined, having acquisitions blocked, that's going to be a positive thing for these companies. Reuters has reported that Donald Trump is likely to shift the course on these antitrust cases and not seek for breakup. He's mentioned before, quote, "If you do that, you are going to destroy the company. What you can do without breaking it up is more fair." So he's already shown some sentiment against breaking up these companies. So we can see that this tone change with the regulatory environment does have an impact on companies like Amazon and Google. Both of them are up today. I also believe that part of the reason these companies are going up is simply because they're just undervalued. I think both Google and Amazon are worth a bit more than they are today. I have both of their estimates around $220. Another company that was somewhat more surprising is the monumental rise in Texas Roadhouse. This, of course, is one of my key holdings. Now, it sounds a little silly because it's just a small restaurant. It's a $13 billion market cap. They have like 800 locations. And this isn't some big tech company. It's not NVIDIA. It's not some world-class AI company. They sell tasty rolls and steaks, rice, mashed potatoes, you name it. Texas Roadhouse is just a restaurant, but it's been one of the best performing stocks over the past 5 years, beating out many companies this year. So far this year, when you factor in the hefty dividend they pay, it's up over 70% on the year. And with it rising another nearly 6% on the day, we've surpassed $200 per share, making Texas Roadhouse the most profitable company I've invested in since the beginning of my portfolio, with current gains of $53,000 and a total position size of $87,000. And right now, this company has moved my third largest position in my portfolio. This is one that I had to think about more because they didn't face any type of regulations. They didn't face any type of disruption risk. I believe the primary reason that Texas Roadhouse is doing a little bit better today is simply the projection of lowered and maintained tax levels. Companies like Texas Roadhouse have very small margins. Restaurants are not high margin businesses. They're low margin, high volume businesses. So any fluctuation in effective tax rate has a huge impact on their overall profitability. So if Texas Roadhouse was to hypothetically have their taxes raised another 3 or 4% from a hypothetical Kamala victory, then this would eat into the earnings of the company. It wouldn't destroy it, it wouldn't cause destruction to it, but it would eat into the earnings a little bit for the company. Two businesses that are likewise in the green a lot today are Visa and MasterCard. Again, these are two companies that are dominant, monopolistic companies that will benefit from a less regulatory burdened environment. Another one in my portfolio that popped a lot today is Intuit. This one's up almost 6% on the day. Now, there's a couple reasons why this one could be surging today, but I believe the biggest one is because under the Biden administration, there was a strong effort to create a free government tax solution. And that's something that's not likely to get as much priority under a Trump administration. Now, two companies that are breaking the mold, ones that are either flat or in the red on this enormous green day, are S&P Global and Moody's. So what gives? Why are Moody's and S&P Global trading down while the rest of the market is surging? Well, the primary reason I believe is because of a term called ESG. Both Moody's and S&P Global have aspects of their business where they sell ESG ratings, which is environmental, social, and governance ratings for companies. It's basically a rating given to assess the non-financial risks of a company. Now, this term ESG has become heavily politicized over the past 8 years. It's been something that Republicans have fought against. Republicans believe it's a bit of a Trojan horse in controlling these different companies. So with Trump winning, there's one small portion of S&P Global's business that could be impacted negatively if they were to take a big stance against ESG ratings or to try to regulate them or do something negative to them. That's the only reason that I can think of that S&P Global and Moody's would be in the red on this day. From a long-term perspective, as someone that's invested in both of these stocks, I don't think it's going to have a long-term negative impact. They're going to continue selling this data and analytics to companies, and if they have to rebrand it from ESG to something different and pivot what they're selling a little bit, I don't think that's going to be too much of a problem. Now, finally, we get to another holding, which this has been the best investment I've made over the past 6 months, Booking Holdings. It surpassed $5,000 per share, up 2.3% on the day. This is incredible. When I invested in this one, it was a bit of lucky timing. I came out with a video and the stock dropped when I already had done research on it. And that is the best situation. When you've already done a lot of research on a company, you're thoroughly convinced it's a great company, it's a great bet, the risk and reward is already good, and then the price goes down for reasons that don't make sense. During this earnings report that the stock dropped, they raised guidance. They beat on their earnings and on their revenue. Everything looked great. Even the CEO said, this is a great report. We don't know what Wall Street thinks. We don't really care what they think, but our business is doing well. That's what the CEO said about the company when the stock dropped 10 or 15%. So I was able to pick up a lot of shares during this time that was a low point for it, and it's just surged upwards since then, going from $3,300 per share now to $5,000 per share. When I look at Booking Holdings today and the future of this company, I still believe it's very bright. They offer travel and vacation experiences. This is an area that I think is good to invest in right now. GDP per capita is growing rather quickly. People are inheriting lots of money from their parents. They have money to spend. Not everybody wants to spend it on things. Most people want to spend it on experiences. And Booking Holdings is a bridge you have to pass to go on those experiences. So this company maintains a very advantageous position to be in. So like I said before the elections, like I would say after every election, including the one 4 years ago where Biden won, I made a video after that election as well, saying that I'm bullish on America. And I remain the exact same today. I'm still bullish on this country. I think it's going to do great. We have so many smart people here. We have so many great companies. There's so many opportunities. Now that the election is over and earnings season is winding down, I'll be coming out with more news-oriented content as well as deep dives into different companies. I have a deep dive into a company that I've not talked much about that I think is very compelling. I'll be releasing that one relatively soon. If you want to see it, just make sure you're subscribed to the channel. Other than that, see you next time.